In this lesson, we'll explore the basic options you have for defining accounts in OptiPlan. Of all the options you have when creating a scenario, the proper planning of investment accounts is often the most effective way you can help your clients to create an income plan that will last through their lifetimes. In OptiPlan, there are 4 different account types that you can define for your clients: managed stock accounts, annuities, sometimes known as self-funded pensions, fixed-rate income accounts, and bank accounts. Your clients will often have existing managed stock accounts and bank accounts, but many of them won't know the options and benefits offered by the other account types. OptiPlan can help you define the account types to use in your clients' plans and create scenarios that explore the various ways in which those accounts can be combined. To help you decide which account type to use, remember these basics. The rate of return for managed stock accounts and annuity accounts can be affected by stock market performance in bear markets. Bank accounts and fixed rate accounts are not affected by the market performance. The yearly income from annuities and fixed rate income accounts are fixed for each year. Income from managed stock accounts and bank accounts is automatically calculated based on the yearly shortfall between expenses and income from all other sources. There are many different options that can be selected for each account type. Some of these attributes are common to all the account types, and some are specific to just certain account types. In this lesson, we'll start with the common options, then explore the more specialized options in the lessons for the specific account types. Begin by giving the account a unique name to identify it in the plan printouts and the calculations tables. The name should be short to keep the calculation column widths small but descriptive. Examples include Sam's IRA or joint savings. The account owner must be set to one of the clients in your plan. For accounts that contain pre-tax investments, selecting the correct owner is important as that will affect the required minimum distribution calculations. For bank accounts and other after-tax investment accounts, the owner must be selected, but it does not impact the plan calculations. The opening balance attribute defines the money in the account in the year it will be opened. If the account already exists, enter its current balance in this field. The display sequence is used to define the order in which the account is displayed in the calculations table for the plan. Most planners group accounts by their account type, but you can set the order to any sequence you prefer. The year opened attribute defines the year when the initial investment is made and when the rate of return is applied. In most cases, the year opened will be the same as the start year for the plan, even if the account was opened in earlier years. But in some cases, you may wish to defer the start of the account to a later year, perhaps to account for an expected inheritance or trust fund, or transfer from another account. The year closed attribute defines when the account will be closed. After the year you specify, this account will no longer earn interest or provide income for the plan. In most cases, you can leave this attribute empty and the account will remain open for the duration of the plan. However, if you specify a value for this parameter, the account balance will drop to 0 in the following years. If a balance remains at the end of the account lifetime, you should create another account that begins the following year and start that account with the funds from the closed account. The first income year and last income year attributes define when each account is available to provide income to the plan. For some accounts, such as annuities, you will usually have the account accrue earnings for a length of time, and then start taking income from the account later in the plan. In other cases, you may wish to take money out in the early years and then switch to other accounts for income in the later years. If the account will pay income for the client's entire lifetime, leave the last income year blank and it will automatically be set to the last year of the plan. The tax switches are used to identify which taxes the income from the account will be subject to. There are separate switches for federal, state, and FICA taxes. Watch the lesson on taxes for more information about how OptiPlan calculates the taxes for the plan. The qualified switch indicates that the balance in the account will be used to calculate the owner's required minimum distribution, or RMD, each year of the plan after the owner reaches 70 or 72, depending on his age. This option should be turned on if the account contains pre-tax money.